Greetings to you. We are back in the saddle. Good to be back. And there's a lot of news out there today, so let's get to the what was it again? Somebody type it in the comments. The most underrated show on YouTube. Man, before we get going, this Mr. Reyes guy, he's first day. This is his first day here. He said he made started at $75,000 13 months ago and turned it into $250K. I want to know what you were doing, Mr. Reyes. Tell us about it. Jump into the welcome. Join our Patreon. Let's get at it. But all right, guys, I will touch on the Chinese madness. So we are back. S&P futures, everything is just basically flat. Okay, so everything is going to probably remain flat until Thursday. We have the Fed minutes coming out tomorrow. We have some economic data coming out this week. So let's see. Everybody just got to be patient. I know everybody's excited to get at it. We had pretty light volume last week. Of course, no market yesterday. Short 4-day week here. But we just got to be patient. This is what happens when you have big economic data coming out, especially following a holiday weekend, especially in today's market. Today's market is insane, as we know. So let's get at it. So let's start with the big news that's going to happen this week, and that's the Fed minutes. So what the Fed minutes are, of course, they had their meeting last in June at the end of last week, or was it the previous week? I think it was the previous week. All these weeks are just running together. But now they're going to put out their minutes and basically discuss and go forward with what they actually think, and all of the different Fed presidents are going to have their say in things, and they're going to make their comments. We've already got a little bit of that, and we have a lot of Fed presidents saying what they want to do with interest rates, what they want to do with quantitative easing, but that's going to come out on Wednesday, so just be patient, and we will see what happens. So the central focus this week will be on a handful of economic data reports, including the FOMC, that's the Federal Open Market Committee, June meeting. These are, let's see here. So the big thing is going to be, what are they going to do with their interest rates? And because they're near zero, and then their asset purchasing program, which is the quantitative easing, $120 billion a month of mortgage-backed securities and treasuries. So the Fed met, 2 weeks ago here. And of course, we want to know about this quote unquote transitory inflation that Jerome Powell keeps saying. I do not really understand what transitory is. I would still love somebody to explain it to me. And the possibility of 2 rate hikes by the end of 2023. Of course, that sent the market into a little bit of a tizzy, because they had said since the beginning of COVID that we were not going to see any interest rate hikes until after 2023. So even if it is 2 interest rate hikes by the end of 2023, I have to believe that they're going to be quarter points each. It's not going to be like 2004 when they increased it. I think it was 425 basis points, 4.25%. It's not going to be like that. If anything, this Fed is very dovish, and they're going to only do very light rate hikes. So let's see. The mid-June meeting saw a range of officials bring forward projections for interest rate hikes, and the minutes will probably reveal several stressing about the upside risks of their relatively benign inflation forecasts. This was also the meeting at which Jerome Powell finally admitted that they began talking about tapering. That's the most confusing statement ever. The Fed loves to be confusing in every way possible. In Wednesday's minutes, we may see some clarification of what would constitute substantial further progress towards the Fed's goals. Let's see here. The last couple of weeks, Fed officials, this is the big one. We keep seeing this over and over and over. There's so many Fed officials that keep coming out and saying they're making public remarks that are hinting towards where that discussion is going to go, which is, I don't think you should take it with a grain of salt. I think you should start really paying attention to what these other Fed officials are saying, because they do have a lot of weight in this process, almost as much as Powell. Let's see. They're just going to taper. And of course, this is the issue, guys. Supply is the problem. We're seeing it everywhere. We just came back from Turks and Caicos. To be honest with you, one of the biggest hurdles that we're looking at is furnishing the home, and it comes down to a supply issue. It's not only Turks and Caicos in the United States. I tried to order 2 chairs for a room in my new house the other day. It was 16 weeks minimum to get 2 chairs. The supply issue for everything is becoming an issue. Furniture, of course, we know the chip shortages. That's moving into cars. That's moving into technology. So, sheesh. Let's see what's going to happen. I don't know. And then this was another big one. The Fed Governor Christopher Waller told Bloomberg he believes that it's appropriate to start pulling back on some of that stimulus, which in my opinion is, well, it's not really an opinion, it's a fact. It's quantitative easing. That's exactly what it is. That's quantitative easing put us in the situation that we're in now, and quantitative easing had a lot to do with putting us in the situation that we were in 2008. But what do I know? All right, let's go to inflation. This is just an opinion, but I thought it was pretty good. The Fed is underestimating the risk of big inflation. All right. So from May 2020 to May 2021, the price index for personal consumption expenditures, or the PCE, rose 3.9%. While, of course, consumer pricing index, as we've seen in the past couple of weeks / 2 months, has jumped 5%. The inflation outbreak has come as a shock to many economists. The latest numbers have undoubtedly required top officials and researchers at the Federal Reserve to revise their thinking. Now, let's read this article, then I want to say something. The Fed considers the PCE index the most reliable indicator of price trends. The FOMC predicted that in June 2020 that the increase in the PCE in the year to the fourth quarter 2021 would be 1.4 to 1.7%. At its June meeting, the band was increased between 3.1 to 3.5. So the only thing that I look at with that is if we keep getting these massive spikes instead of the gradual increase, that's when you start to get problems. When things go up too quickly or fall too quickly, that's when you start to get issues. And that's what it seems to be happening with this. Now, of course, we're in unprecedented territory. So who's to be able to predict where things go? Just because we haven't seen this before, there's no history to base this off of. But when you start getting more numbers like this, guys, I say it all the time. We look at not just one number. They say this is the PCE index is the most reliable indicator of price trends. It's not only that, it's this combined with so many other metrics that are just saying that things are getting out of control. So when you look at these numbers, just look and see how quickly they're rising or quickly they're falling or what have you. And that's a pretty big indicator. Okay, so this article, of course, because that's just what they do. This went at it from an identity politics point of view. I'm going to totally ignore that because I do think it's an important article when it comes down to just the numbers and the jobs aspect of it. So we know that, I've said it multiple times, most notably, in my opinion, restaurants, hospitality, those jobs need to come back before we see substantial jobs numbers coming back. And leisure and hospitality are struggling. Now, in the hospitality industry, hotels, restaurants, museums, spectator sports accounted for 10% of the entire workforce pre-pandemic. Let's see here. This article is specifically talking about women, but women did lose 1.4% of those jobs in that 15-month period. So if the problem is still, I looked at the jobs number that came out on Friday. If you guys remember back to April, the world was basically over for a couple of days because they expected 1 million jobs being created in the month of April. And it came out, 260,000, 280,000, something like that. On Friday, we got 850,000 jobs created in the month of June, and it was being celebrated. But we were supposed to create 1 million back in April. So that's still a lot of jobs that have not come back yet. So with this number, with seeing how many people are still out of labor, out of hospitality, there's still a long way to go. There's no doubt that things are coming back. 850,000 jobs in a month, that's very good. But the point is, just keep a watch on these things. There's opportunities out there for you guys. When we get a big spike in hospitality, this and that, travel, when these companies actually start coming back and reporting good, profitable numbers, there's going to be an opportunity for especially you traders to go out there and go ahead and trade the companies. I don't know. I don't think that you'll be able to grab a lot of them from a value perspective just because they're completely overvalued. But from a trading aspect, I think you'll have a good opportunity. All right. Gold regains shine after the central bank drops to its decade low. Now, the reason I wanted to highlight this article is the start of the second one that I'm unhighlighting right now. Central banks from Serbia and Thailand have been adding to gold holdings, and Ghana recently planned to announce its purchases. Now, the reason that I say that is I always talk about gold. It's not just a U.S. thing. We talk about it being a hedge against inflation. Contrary to popular belief, Bitcoin is not the hedge against inflation. Gold has a better chance of doing that and has done that historically. But it's not just a U.S. thing that when it comes to gold. It is all these different governments, all these different countries around the world. So you got to pay attention to the global if you want to really get into the nitty-gritty of gold. Now, if you want to buy ETFs, get a broad perspective of it, understand it, and then move on. Long term, gold is the most significant guardian and grantor of protection. This makes me, every time I hear people talk about the Bitcoin being the hedge against inflation, it's just the best. So bullion came under pressure this year as higher bond yields made the non-interest bearing haven seem less attractive to investors. And of course, going back to, what was it, 2 weeks ago? Gold was the worst thing out there. It was crashing, this and that. Now gold is back into favor. So when you read these stories, guys, take them with a grain of salt. It's going to be okay. All right, this is the big news of the day. China's big tech crackdown puts dozens of U.S. IPOs at risk. I know in the Bid and Ask Nation earlier this morning, people were talking about pretty much every Chinese company there was. People are looking at, I don't know what Baba is at right now, pre-market, but a lot of these things. So the Chinese government is going and doing investigations or something into these IPOs. Let's see. Chinese companies hopping onto the list now face harder task in pitching their shares into prospective investors. So as Beijing probes Didi Global, China's version of Uber, and two other firms that recently debuted on Wall Street, global equity managers are questioning if the regulatory threat posed by the Asian nation's increasing efforts to control big data is risk worth taking. The Didi situation reinforces the fact that China is annoyed by the flood of U.S. IPOs by Chinese tech companies and is attempting to slow the reception of these IPOs in the West. If you look at it, a lot of those Chinese, if you go to Yahoo Finance and click on the most search companies today, they're pretty much all Chinese. So there's 34 pending U.S. Filings for U.S. listing right now. Didi, they dropped 5.3% on Friday. They're down over 25% as of the time that I read this article, which was probably 8:30. So let's see. But there's two other companies here that are also being probed. An owner of an online recruitment platform, Kenzun, and Full Trucking Alliance, an Uber-like trucking startup. So guys, if you're in these, be careful. We say it all the time. There's been a lot of evidence of fabrication of the financials from Chinese companies. Not all of them, of course. Alibaba's never really had a major issue. I mean, they've had one issue. I can't remember what it was. The big one was Luckin Coffee. They had a big one, but in most recent times. So just be careful with those guys. If you want to trade them, I don't know, maybe short them today or something. Department of Justice opens an investigation into the EV startup Lordstown Motors. So all of these Lordstown Motors, they're just getting beat down. So an investigation is going to start with them by the Department of Justice and the Security and Exchange Commission. They have said that they are going to cooperate with all of the investigations from the government. Not that they really have a choice. And they said they look forward to closing this chapter and moving on to their new leadership. Of course, they've taken a new CEO and new CFO. And the reason is that let's see here. The deal injected EV startup with around $675 million in gross proceeds, skyrocketed its market value to $1.6 billion. Less than a year later, Lordstown informed the SEC that it did not have sufficient capital to manufacture the vehicle called Endurance. And this happened maybe 3 weeks ago. Then in March, the short seller firm Hindenburg Research released a report disputing the company's claim that it had booked 100,000 pre-orders for the electric pickup. It wrote that extensive research reveals that the company's orders appear largely fictitious and are used as a prop to raise capital and confer legitimacy. That's when the SEC opened its investigation, and now the DOJ is looking into them. So that looks fun. Just be careful if you're doing that. So Lucid, who here? So back in 2018, that's when I first saw these Lucids. These things were incredible. And actually, I pulled up the website. Look at that car. This car is awesome. And not only I thought back in 2018, I actually might have a pre-order on one of these from 2018. I think I actually might. But this was when this thing was just a pure concept. But they were already claiming back then that it's going to be 500 miles per charge. And the Saudis have back in 2018, they put $1 billion into this company. There's no Tesla that gets 500 miles per charge. That's for sure. The design is just very clean. It has the performance. It has all the tech stuff. It's a little bit different of a design. They use Android Auto as their infotainment center system. So it's pretty cool. In their top model, they actually have. They use the back seats are like the Maybach, where it folds down completely and you can like lay back there. It's pretty interesting. So this by July 2021 will be a big month for Lucid and that CCIV stock. They're going to go public, listed as LCID in the NASDAQ. So they're saying that they're going to be major competitors of Tesla. I do believe it. They seem very, very structured. I've never really seen any chaos coming out of this company like you see coming out of all the other companies. They're just a very clean, moving forward company, and they've done very well. Now, when it comes to Lucid versus Tesla versus any EV company, I just look at it and I just say, man, their charging system and network through the entire United States, they have some 25,000 charging stations, not that are theirs. They have their own, they're supercharging stations, but they have 25,000 that they can use throughout the country. That's a lot of, just the infrastructure that they have as a stronghold on the country. I assume other countries too, is really crazy. But let's see what Lucid can do. The big thing is that the car is beautiful. They've already filled up their top tier pre-orders of their super fancy cars. 500 mile plus range, which no other EV company does right now. Lucid also plans to innovate into the SUV space in 2023. They plan on having 20 studios by the end of 2021. That's just showrooms. Of course, Tesla is closing showrooms, and these guys are opening showrooms. CCIV, just be careful here. But if you guys want to trade this, have at it. I think these are great day trades that will come in later in July when they get moving. CCIV rose 30% in June. I think they're a big donor to the company, not donor, investor in the company. Let's see. Lucid Motors EV reservations have been incredibly popular, reaching 10,000 in recently. And of course, their plan's going to be in Arizona, so they're not going to be paying those ridiculous California taxes. Lucid members have team members that have previously worked on revolutionary companies like Tesla, the Model S, of course, at Apple, the iPhone. By July of 2022, foregoing any extenuating circumstances, Lucid will have successfully claimed the luxury EV crown from Tesla. I think that's a little bit aggressive, but I think that they will do very well in the space. I think they make a great car, and that's wonderful. All right, so we put out a video this weekend about Dave Ramsey and paying cash for your home and getting mortgage for your home. I just saw this piece from, it was from Investopedia. It just popped up as a random suggestion. Maybe they know we put out the video. Should you pay all cash for your home? Advantages to paying cash. You're a more attractive buyer. You could get a better deal. You don't have to endure the hassle of securing a mortgage. You'll never lose sleep at night over mortgage payments, and you'll look forward to a mortgage-free retirement. All right. Now the disadvantages where I more want to focus. You'll be tying up money in one asset class. Okay, that's fine. That's true, I guess. You'll lose the financial leverage the mortgage provides. Yes. You'll sacrifice liquidity. Yes. And then that's it. Nobody goes on to talk about what we were talking about, how you are hindering yourself in retirement and you're hindering your asset. I mean, you're crushing your goals of retirement. If that's your goal, is to just get there and retire and you want to have less money, but when you really start using that compounding interest calculator and or if you use the retirement calculator on the everythingmoney.com website, you see how much money you sacrifice in retirement. No article talks about that. You never ever see that. All you do is talk about the being able to sleep at night. If that's your main goal, fine. I personally don't think that that's the main goal of that many Americans or Canadians or wherever you're from, personally, but I could be wrong. Dave Ramsey does a great job of getting people to be debt-free. There's absolutely no doubt about that. He's helped millions of people in this country and probably beyond. But when it comes down to paying off your home, especially with rates that we're seeing now, I mean, I've heard of somebody getting as low an interest rate of 2.25%. Come on, you could put your money in the worst performing ETF and get better than 2.25% in retirement on your goals. All right, guys. Let's see. That's it. So give me. Before I do that, I want to pull up this. Okay, here's Lucid. Let's see what the markets are doing real quick. I just want to see if there's any changes. Nope, no change. Yield curve. This one's fun. I'm starting to see the 3-month is staying pretty steady at 0.05, but look at the 10-year. 10 years dropping. And when you get these two, if these two get relatively close and start getting really close to that inversion that I always talk about, that's when you're going to see some true headache in your markets. And it's not going to be very temporary. I mean, it could be, but it's not going to be a week-long thing. That's what I mean. All right, guys. Patreon.com/everythingmoney. If you want to join our Patreon, we have different tiers that you can jump into. Here's the Discord tier, $7 a month. If you want, this just gets you access to our Discord. That's it. If you want our software, all of our software, and access to Discord, $24 a month gets you that. If you want to join the Bid and Ask Nation, do some trading, that's with me. Discord access, all the software for free. And of course, in any of them, well, not any of them, in these two right here, you get discounts on merch, which we're coming out with soon. And of course, if you want to do if you're buying any properties and you want to talk with Paul, 10 G's, that'll get you a discussion with Paul to run through your numbers. It's probably worth it on your part. In my opinion, it is. I wouldn't do a real estate deal without talking to him, but that's just me. All right, guys, give me some stocks. I know some of you want to look at these Chinese things, so I'll do them if you want. I'll do this Churchill thing that everybody likes because they have to do with Lucid, so we'll do it. So, when did they go public? They went public pretty recently, didn't they? They went public on April 5th. Sweet. So, I do not like trading IPOs on these charts because I don't have enough data. This is all I have right here. That's it. Nothing else. I basically go back to April 5th and I don't have any data. So I look at this as an entire book. A chart is a book. And if I don't have a year, I really don't have all the chapters to that book. So it makes it a little bit more tricky. But yes. Where are we at? CCL? I'll do CCL. Let's see what we got with CCL. CCL is one of those. I know that they were talking about share dilution recently. Did they actually do that? Let me refresh these charts. Did they actually do that? Or was that just in their plans to do? Somebody let me know about that one because I honestly can't remember. And let's see here. All right. So the big thing about CCL has always been, going back to pre-COVID, is that they're that 50% stock, and you just have all that pressure shoving down on you like so. And you can see that they're trying to break out. They've tried multiple times, and they just can't break over this level of $32 a share. Now, the only way to get this thing going, CCIV. All right, I'll do CCIV. I thought that looked wrong. All right, so if you want to, man, this is so tough, especially with where they're at now. You got to break through all three of these moving averages. It's going to be a rough go for you, but I think what it's going to take to get Carnival moving on from a charting perspective again and really breaking through that $32 high right there is they got to put people on cruises again, and they got to have good financials coming out and good earnings reports coming out, and they got to stop diluting their shares. Once that perfect storm happens, I think that Carnival will actually start moving and go from there. All right, CCIV, I mean, I don't really see what's going on with this thing. It's just sitting here going sideways. It doesn't know what to do. When did these guys go public? Isn't this the same company? No? Okay. September of 2020. So they're almost a year old, but not much doing. I'm sure they'll get a big bump when it comes to all that stuff that comes out with Lucid and whatnot. BTI, British Tobacco. So if you look at British Tobacco going back, what's here to November, you can actually just draw lines right here and look at that. You're just stuck. You're just range bound between, let's call it $38 and $40, and you just can't just break out there. So this is a great stock swing trade, but it's rough. It's a rough go for you. I need to see a lot more movement than that to be excited about something. All right, MasterCard. Okay, MasterCard's finally getting a little bump. They popped up today over their 50-day moving average, coming through the sweet spot nicely. Let's see what happens. They got this little pop on Friday. Today they're staying up there, which is good. I probably wouldn't be doing anything, though, until they break out over this previous high that it made going back to last week. That's just my opinion, though. And everybody has one of those. All right. Viacom. It's breaking its flat line. Is it? Viacom. Oh, gosh. Oh, Viacom. I don't see it breaking any flat line. Let's zoom in more. I guess if you zoom in that way, it is. With Viacom, if I'm you, I'm waiting till I get over that 100-day moving average. That's just my opinion. Mr. Reyes, I will give you Momo since you came for your first time. Hope you're enjoying it. All right. Now, this switched into a downtrend today. Friday. We have a sweet spot reversal. Let's zoom in here. This is yikes. Let's zoom in here. All right. Look at all that mess. I mean, this thing has no idea what it's doing. I would not touch this thing until you drop below the 50-day or break above the 100-day. This is just a total mess. I don't see why you would give yourself the headache with that thing. Not at all. SWKS. I like that company. They might be a sleeper in the 5G world. All right. Great uptrend. Pretty decent day on Friday. You need an engulfing candlestick. If you get that, you should be good. Let's zoom out just a little bit more and see what they've done the past year. So you will face... Okay, so you're going to fill this gap right here, right there. But you're going to face a lot of resistance coming up and going to make all-time highs. So, isn't the 5G going to be a while? In my opinion, I don't think the 5G is going to happen in the format that they're saying it's going to happen. Will 5G be there for cell phone services, and will it be better than LTE? Yeah, I do think that. Will it be in the near future? The way that they're talking about how it's going to be used for medical operations, being across the country and across the world and this and that. No, I don't think so. I mean, they're talking about 5G being this global phenomena. We're just in Turks and Caicos, and they barely have internet there. I mean, you're talking about going around the world. There's countries like Aruba that just got that just got LTE 2 years ago, and now we're going to say that they're going to get 5G. Come on, get real. It's not going to happen in that format anytime soon. And frankly, by the time that 5G is about to roll out in that format, the cell phone companies are going to be already moved on to 6G or whatever you want to call it at that point. So, all right, guys, we have a live stream today at 1 o'clock Eastern time. Me, Seth, and Paul, and bring your questions to it. We will talk there. We'll probably talk a little bit about our home in Turks and Caicos that we saw. And that is that for today. So I will see you guys 1 o'clock today. If I don't see you at 1, I'll see you tomorrow morning. Jump into the Bid and Ask Nation and follow me on Instagram at TraderMo_EM. I need to get to 1,000. Please help me. See ya.